The extremely volatile trading week is coming to an end, and new North American session promises some relief to investors and even positive news. What is the catalyst for optimism on Wall Street? InstaForex analysts will tell you about it. The benchmark stock indexes closed in the red yesterday. The worst-case scenario from our analysts came true. Each of the three stock indexes closed at the lowest level of November. The Dow Jones tumbled 764 points, or 2.25%, with the sharpest intraday loss since September. The Nasdaq plummeted 3.23%, and the S&P 500 shed 99 points, or 2.49%, to close at 3,895. The major stock indexes traded mixed in the New York pre-market. The Nasdaq is the only index to trade flat. The Dow Jones and the S&P 500 went lower in a negative territory. The S&P 500 is expected to close down at 3,810 points, but it might recover to 3,940. The rally on Wall Street, which had been going on since mid-October, came to an end. The hawkish Fed, resolute Powell, and the mixed economic data ruined the appetite for risk. The US Fed predicts the ultimate level of the funds rate above 5% in 2023. This level has not been recorded since the severe economic downturn in 2007. Besides, investors assessed the recent economic data. The U.S. retail sales fell more than expected in November, thus making the steepest drop in the last 11 months. The U.S. manufacturing sector shrank 0.6% last month. The Federal Reserve Banks of New York and Philadelphia reported that business conditions in these states remained dismal. The number of initial unemployment claims went down last week, and this signals tense conditions in the labor market and sets the stage for persistent high inflation. In the autumn, economic data gave hope to the U.S. stock market. However, investors dispelled illusions in the light of the fresh data released this week. Policy decisions of major central banks dampened the positive outlook for stocks. Apart from the Federal Reserve, the Bank of England and the ECB signaled a protracted cycle of rate hikes. Moreover, other central banks followed suit in an effort to tame inflation. All 11 sectors included in the S&P 500 traded lower. The shares of a telecom and the high-tech companies slumped almost 4% with the worst intraday results. A series of preliminary PMIs for the Eurozone showed slight improvement, but all of them revealed contraction for 6 months straight. UK retail sales unexpectedly dropped in November. The EU inflation again rose higher than expected. At the same time, the stock market found a source of optimism. Almost 200 Chinese companies, including Alibaba and Baidu, signed with a relief after the US watchdog gained full access for their audit documents. This eliminates the risks of removing these companies from US stock exchanges. The news could support high-tech giants. Meta's shares jumped 1.7% in the pre-market after JP Morgan upgraded their rating from a neutral to overweight. Adobe shares rose 4.2% after the company upgraded its revenue forecast for the first quarter. Importantly, optimism is fragile. Wall Street could be hit by selling in the early American session. Market catalyst today could be PMIs for the U.S. manufacturing and the services sectors for December. Federal Reserve Bank of San Francisco, Mary Daly, is due to speak later today. The currency market is trading quietly today after sharp price swings on Thursday. The US dollar rebounded 0.85% overnight. It's trading mainly sideways at around 104.50 for the most of the day, within the range between 104.20 and 105.20. The battered US dollar regained some losses following the news of a Thursday risk aversion led the US dollar to comfortable levels. The US dollar index has strengthened by 9% this year because the US Fed raised interest rates sharply, thus channeling money back to dollar-denominated bonds. Nevertheless, the index has slumped nearly 8%, having reached its 20-year peak in September. The greenback owes its strength to high inflation and the hawkish Federal Reserve. Besides, aggressive monetary policy is pursued in the Eurozone, the UK, Switzerland, Denmark, Norway, Mexico, and Taiwan. Central banks pledged to go ahead with the rate hikes to bring down inflation. As long as the high inflation is raging in the US in parallel to the strong labor market, the US dollar is going to be in favor with investors. The USD CAD pace is trading sluggishly today, having edged up 0.08%. The instrument is trading at about 1.3666. The intraday CAD is seen between 1.3640 and 1.3720. The loonie was hurt by the US dollar's rally on a Thursday. It will hardly consolidate today. The loonie is losing ground due to the firm US dollar and the falling oil prices. Crude oil took a nosedive on a Friday as the market is assessing global economic prospects in the light of a series of rate hikes by influential central banks. Brent futures dropped 2.3% to trade at 79.34. Aggressive monetary tightening worldwide is already taking its toll on the manufacturing activity. Sentiment in commodity markets has turned sour due to the hawkish rhetoric of the central banks. Both benchmark oil rates are on track of the fastest weekly growth since early October. Bitcoin is also trading according to the worst-case forecast by InstaForex. The crypto market is marked by doom and gloom. Popular cryptocurrencies are trading lower today, having fallen 2.4% in the pre-market. Bitcoin is now creeping to 16,800, the lowest border of the trading range. Former FTX CEO Sam Bankman-Fried has made a bail application before the Bahamas Supreme Court. Mazars, the audit firm working with the Binance, suspended its activity for clients in the crypto industry. Tight financial conditions in client economies to blame for the bearish outlook for the crypto market. Bitcoin is expected to trade in the same range between $16,800 and $17,200. InstaForex team wishes you successful trading and nice weekend. See you online on Monday.